All right, crypto market update. So, looking at Bitcoin, obviously, we could look at Bitcoin in a number of different ways or charts a number of different ways, but sometimes I try to look at things in a different angle and try to find things that I haven't found before in the chart or that other people aren't necessarily talking about. So, I found a couple interesting things. Number one that I found kind of interesting is that percentage wise, this from the recent swing high here, not much of a high, but just from this top breakdown point to here, percentage wise, this is the second biggest dump on Bitcoin in 2018. There's only one that beat it, and it was this one. Right, this one from this high all the way down. I'm not counting the little bounces in between. Obviously, we don't know if this is the bottom yet, so maybe I might have to drag this down if it did dump more. But if you look at all the other ones, so this one's we're at 50% right now. The initial one was around 46%. This one right here was around 45%, and then obviously the percentages get smaller and smaller. So this is number two. So that's one interesting thing. Another thing that I've noticed when we look at descending lines, so I'm a big fan of descending line breakouts because it's almost like a hybrid of a breakout and a knife catching. So another thing I've noticed is that generally the first one tends to be a bit of a fake out, right? So you'll have one break, but it's usually not the one. Usually needs to bleed out some more, and then the second one tends to break. You can kind of see the same thing here. This one was a fake out, wasn't a real break, but then down here it was. Here it was just kind of, I guess you could kind of say the same thing with this one right here. Turns out the break was there. And so similar to where we're at now, we did have a fake break right here. We had an immediate bear channel. That broke down. So bounce broke down. Now we seem to be breaking another descending line, which is about a month long. This is about a month of sell-off. Right, so that's another thing that I've been looking at. So is it the bottom? We'll only know after the fact. Maybe it goes lower, but let's see what happens. So, other interesting news today. Tezos is getting added to Huobi, which happens to be the fourth largest exchange in the world. So that's kind of interesting. Now, I mean, it's debatable how much of their volume is real. We know there's a lot of wash trading that tends to happen on Chinese exchanges, but certainly a good sign. It'll bump up the volume stats or anything like that aren't actually on yet for that, but should be a nice little bump in volume, market liquidity, give another option for the Chinese markets. And one thing I've said before, and I stand by this, I believe that Tezos will get listed on all the major exchanges without ever having to pay a listing fee as it grows bigger. Similar to other larger projects that never had to pay listing fees, like Ethereum or Zcash or whatever, Bcash, Ripple. None of those had to pay listing fees, right? The big projects generally don't have to pay listing fees. Now the thing with this is that it's still very new. Obviously, few months of live network. DApps are slowly trickling in, but I think a lot of the main focus is training developers because it's kind of an obscure developing language. So it's not one that a lot of developers know of. So there's some training, but good developers tend to be able to pick up multiple languages quickly, right? So as this grows, I foresee more liquidity, more volume, so on and so forth, right? I have a question. When are you going to start adding Cardano? I bought a bit of Cardano a couple of days ago after I was talking about it on the update. Later that evening, I decided I want to scoop some up. Now, they don't have the full features and being able to stake from a hardware wallet yet. It's coming. It's not there yet. That's kind of the one thing that I'm looking for most. My goal moving into 2019 and 2020 with these lower prices on stuff is basically to create an investment, a crypto investment portfolio that has a heavy focus on generating passive income. Now, obviously, Zcash doesn't generate any passive income unless you're mining it. But there'll definitely be a lot of proof of stake coins in it. Tezos is obviously the heaviest one. I'll be adding more to my Cardano position as well. I might have to scoop up. I don't know if I'll ever get the low prices that I desire for Ethereum, which would be like anything sub $50. 20 to $40, would be an absolute steal in my opinion. So I would definitely want to scoop up some ETH at that price. But it might not get down there. So it's kind of one of those, if it gets down there, I'd love to scoop some up. If it doesn't, not a big deal. How much would one need for Cardano proof of stake? I think it's very similar to Tezos in that you can do a liquid proof of stake and delegate to staking pools or whatnot. So I think it's pretty much any amount. I don't know if those full features aren't yet, but I figure this, right? If I have to build up a crypto portfolio of cheap stuff, an investment portfolio, I might as well pick projects that are going to give me passive returns of more coins without having to put a ton of energy or hardware investment. Or Cardano does have Trezor support, but I don't think they have delegating support yet. I haven't seen Ledger on ADA on Ledger. I've seen it on Trezor. It's one of the options on Trezor. Decree, like I said yesterday, Decree is another one that's kind of on my radar. Also, something else that I want to point out is I kind of have the same strategy that I want to build for a stock portfolio. Currently, as of a few months ago, my I think it was like October. I can't remember what month it was, but I basically just liquidated all my stocks. I had some weed stocks that were in profit. I had some stuff that wasn't in profit that was at a loss, like BlackBerry. I had some stuff that was in profit but broke support, like Deutsche Bank, so I cut that out at the break of support. The reason for that is because I was kind of showing how it looked like the entire, S&P 500 and the Dow Jones looked really parabolic, and a lot of those FANG stocks looked parabolic. And also my hypothesis, so it's not my hypothesis, but just doing some reading on the global debt bubble and how, negative interest rates and quantitative easing has created, cheap money, cheap debt, cheap borrowing, allowing large companies to expand on low interest rates with very small profit margins, right? Which doesn't seem sustainable. We do seem like we're in a massive bubble, and it feels like we need a credit contraction in the economy. It's something that generally happens every 7 to 10 years anyways, part of the economic cycle. So I'm sitting in cash. I'm going to add to my stock trading accounts once this tax season's over. And part of it's also kind of retirement accounts as well, which I recently started to open as of last year, because I figure, either the money, I get to keep the money and invest it and play with it, or it goes to the government, right? So my whole point, all that is, if we do get a stock market crash, a major crash, I would like to build a stock portfolio with passive income, high dividend returns. So I'm just really where my mind's at these days is buying cheap stuff for investment portfolios and creating multiple streams of passive income. That's really And obviously, as the price goes up on things, like similar to like a Dash Masternode, back in the day in 2015, I was seriously considering buying a few Dash Masternodes. They were $1 a pop per Dash, so it was like $1,000 for Masternode. I didn't because there were a lot of technical barriers and setting that up. So I had spent a kind of a week looking at that and then decided I didn't go through with it. Anyways, obviously that was a regret, because the node was worth 1.5 million at the highs. So but learning from that, looking at that, when one buys cheap nodes or cheap coins that have staking abilities, as prices go up, it could actually turn into a very substantial form of passive income, right? So I'm gunning, in the next bull run, I'm gunning to have a minimum, multiple 6-figure stream of passive income just from crypto. So that's kind of where my mind's at. I did buy a little bit more Tezos last night. I kind of just, seems like I've been buying a little bit each week. This might turn into my new hobby. But Decree, if Decree can get lower, if it can get to $5, I'd probably scoop some of that up. And maybe I might find some other ones. Obviously, as we move into STOs, maybe there might be some equity plays in 2019. I haven't really seen any interesting ones. I'd like to buy ones that are maybe linked to real estate. Real estate can be a really great way to do passive returns. That's another thing that's on my bucket list, investment wise, is real estate for rental income. It's a great way to park money and have it grow with equity to beat the pace of inflation, and maybe Airbnb it or do seasonal rentals or full time or whatever. I think the Airbnb or seasonal rentals makes more money. So I'm basically just and I already have some passive income streams as well. Like affiliate marketing and stuff, affiliate links, stuff like that generates passive income. So I just want to kind of build a war chest of various different streams of passive income, because it's nice making money while you sleep. And as much as Tezos has crashed and it's all been flames and all that crap, it's still nice watching the Tezos kind of just come into the wallet. And I'm just kind of, right now, when I accumulate something, obviously I take price into consideration, but then I start to really, in my portfolio, I really start to price things in the actual units. So like when I was accumulating Bitcoin in 2015 and 2016, the dollar values, they fluctuated. 1 minute they're up, they break out to new high, and then it crashes 30%, and it goes up and it crashes 30%, and this and that, right? So you just kind of weather the storm. And I was just kind of pricing things in Bitcoin in those years. Everything for me was all about pricing in Bitcoin. I wasn't even as concerned about the USD value until the values of until everything went up to ridiculous prices. For like probably the latter half of 2017, I started pricing everything in USD. Probably from the summer onward, when we had that parabolic run in altcoins, suddenly the USD value mattered, right? Obviously, you got to look at both. You got to look at the BTC value and the US value on altcoins as far as opportunity cost is concerned. Anyways, let me just scroll up. I think there's a few questions. So I think in Canada, does the reward from staking count as regular income, with income equaling the price of the token the day your reward is given to you? Kinda. I think so. But the thing is that these are gray zones, right? These, so from my understanding, when I spoke with my accountant, because it's a gray zone and it's not like the tax revenue people said, oh, if you're staking, it's considered whatever. You know, I know mining is considered regular income, so maybe it could be considered regular income as mining, or maybe it gets considered like a dividend payment. You know, and securities pay a dividend payment. I'm probably just gonna, to simplify, I'm probably just gonna put as regular income, right? Just to kind of simplify things. So I usually, pretty much all my crypto stuff, whether it be trading, whether it be, you know, passive income from affiliate commission or proof of staking or whatever it is, I just put it all as regular income, which kind of gets complicated because they calculate Bitcoin from cost averaging. So you have to know the cost basis of every single Bitcoin. Every single time you trade Bitcoin, it literally can be several months of accounting. And I have 2 accountants now, including the token tax guy, who's, you know, if you have trouble with the accounting stuff, his service is definitely worth it. In my opinion, the best crypto tax service there is. And I've tried the Bitcoin.tax and the other one, forget the other one or whatever it's called, where you can see your whole portfolio. And there are so many bugs in CoinTracker. Thank you. There's so many glitches in the numbers, and there's no support. There's literally no support. So if you have complex, like, you know, for me, things are very complicated, right? So it takes me a while to kind of piece things together, and you know, just plugging things into software isn't going to do that for you. You need someone to kind of like tailor that for you with their software, understands their software. So I've been able to go back and forth with them throughout the year, have certain things adjusted and so on and so forth. And, you know, they've been very, very responsive. So it's certainly worth, you know, it's definitely worth it to me. It's like very high level accounting. It'd be equivalent to, it's equivalent to trading stocks for stocks, right? Like how many normal, regular citizens or investors trade stocks for stocks, right? Do you go into your stock investment account and trade Deutsche Bank stock for Apple stock directly and then have to know what the value is? Like, this is like some high level hedge fund shit, right? Usually it's just all right there and vanilla and calculated, and you get a statement from your investment brokerage or whatever, and that's it. That's it, right? It's all done for you. Give them a little slip. You don't have to calculate and figure all that stuff out. With crypto, you know, money passes so freely all over the place, and so many different exchanges and different fluctuating prices, and it's just, and say, if, you know, if you're new to crypto taxes or whatnot and have to do them, then save yourselves the trouble. Anyways, looks like waves waves went up again. I'm just gonna take a quick peek at this. Interesting. So some follow through, a big dip and some follow through. So this looks like it's actually trending. I'm not trading, I'm not in it, I'm just watching it. I like to watch any crypto trend in a bull market, whether I'm in it or not, because due to correlation, it shows the potential and the possible path of least resistance or what a reversal will look like. It's a good example of exactly what a reversal can look like, especially if it does end up breaking this. It might just top out here, but so that's certainly interesting. Like I said before, you know, we get so blinded by the bear trends and everything looking like crap that you know, we forget how quickly these markets can move. What was the other one? There was another one that went up. Factum, yeah, that one 650% or something like that in the midst of this chaos, and obviously not sustainable, big sell-off. You know, you can usually tell when a market's ready to sell off before it has the major dump, right? You just see basically shoots up really, really high, and then you see these wicks, and then you see an initial dump, and then a bounce. And I wonder if there's any divergence on this. Bearish divergence. Let me just see. Is there? So sort of. So you can kind of see it made a higher high. And it was more of a, it didn't make a lower high necessarily, but it was more of a double top. It's already kind of like topping out on the RSI. You know, very, very overbought. Extremely overbought. Sometimes you don't get divergence on the tops. Sometimes you get very clear divergence. Like right here, this would be very clear divergence on this top. Pretty much almost like a lot of, we saw this in a lot of coins that were topping out last year. Produce bearish divergence. So this is why, you know, regardless of if Bitcoin dumps more or whatever, I mean, we've got some really, really good signs of a very potent bounce, and I don't know if it'll be the reversal, but we have very good signs of a possible nice bounce, including divergence and the RSI being the literally the most oversold it's ever been in the history of the Bitcoin charts ever. It's a record breaker, right? So can it go lower? Sure. Do I care? Nope. It's gonna keep doing what I'm doing. Just like buying low, right? I mean, there's never a point where it got this low. If you look on the weekly, maybe on the weekly, this capitulation we had in 2015 certainly made it down this low on the weekly, and then a dump kind of right before it. Let's see what that dump was all about. Yeah, so the dump right before it. So in my opinion, we're either here or we're here on this fractal. We're actually technically closer to here because this was like an 87%, maybe not, maybe 84% drop. Wait a minute. 85% drop off the top. And, you know, we're 83. If we hit the 3K or 2800 zone, 3K or just a little under, like if we dip down, that would be 85. And something I pointed out before, and never in the history of these Bitcoin crashes has it actually dropped lower than 85%. So even though it could go lower, even though that's certainly possible, it would be the first time it's done that, right? So that would kind of be a historical moment. So maybe this time is different, quote unquote, right? Might be possible. Maybe this time is different. But, you know, we tend to say this time is different in the extremes. I can't tell you how many people told me this time was different when Bitcoin was going parabolic, right? You know, I had private debates with friends, crypto friends of mine. And, you know, this time was different. Oh no, market cycles, no. It's different. Institutional money coming, futures coming, big players are coming, new money's coming. It's different. We're just going to keep going up. No, we're not going to go into bear trend. No market cycle here. Now we're like grinding at the lows. Could it go lower? Sure. It absolutely can. It would be different if it did. So I personally think that 3K or, you know, just a little under is a fairly major point would be a fairly major line to break. right? Because it's not just, prior resistance from this point here and a support wick. It means it would actually break. It would be an anomaly in its overall 10-year meta trend, right? So it would literally make this time different. Now, there's a part of me that thinks because so many people are waiting for that or lower, that maybe it just kind of throws a fastball and bounces here. We don't know. But obviously, if this breaks down, then the 2K area would be significant. Another major area of support. Another reason why I think this area right here is significant is this was the first parabolic rise on this. The first, not parabolic rise, but the first major, it was kind of parabolic. It was a mini parabola, right? It's like there's fractals, right? So you can get multiple parabolas, right? So this was a little mini parabola, right? So you see how it curves up. And then you break out of the all-time highs. And then this was in their parabola. And like literally we were, oh, sorry, my bad. We were right here. You see how it curves up and then crashes. And we had all this hard fork drama and all that crap. Literally, we were debating as to whether or not this was it. Right? And, a lot of people were calling for 800 or a retest and so on and so forth. And so I think this area right here was significant, was a very significant area to break. It kind of pushed us in a new phase of Bitcoin's bull trend, right? The reason why I say that is because altcoins went batshit crazy here. It was alt season, very strong alt season. And from this point forward, when Bitcoin started to bounce and then break out, Bitcoin was taking back its dominance. From here up into its peak was Bitcoin's turn. Bitcoin was the show, right? Then altcoins had a little alt season as Bitcoin is crashing, had the dead cat, and alts had their moment here. But for the majority of 2017, this was Bitcoin's moment. So the break of this area, is fairly significant in the Bitcoin bull trend. This is where it was taking back its market dominance. So on that note, it's a very significant price area as well, right? So we'll see. Time will tell. It's all just a hypothesis until the markets make a move and show us otherwise. But, it is interesting that this is the second largest dump percentage-wise, not dollar-wise. Obviously, when you're dropping $1,000 a pop or whatever, dollar-wise, a lot of these were, but percentage-wise, this is number 2. So it is significant. And, we haven't had volume like this. The last time we had a volume spike like this on a sell-off was this dump right here, which is pretty epic. And then for most of the year, there is weaker and weaker and weaker. So that's pretty much it. We'll end it there. So that's it for today's market update. Just kind of looking at things from a different angle, but still just playing the waiting game, really. It's not too much for me to do. Most of the time trading is just waiting. You're either in positions and waiting for positions to fill or waiting to take profit or whatever. It's usually, or in no position, just waiting. All right, folks. Take care. Have a great day. Let's see what the markets produce for us. And if anything changes, I'll jump in the trading room. Cheers.